It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal, to help cut through that noise to navigate the best moves for your portfolio. Shoppers feeling the pressure of rising costs flocked to discount retailers in 2023 in search of a good deal. Today's CPI print showed that consumer prices grew more than expected in December, signaling the fight against inflation may have a ways to go in the new year. So what's the best way to play it now in retail? I'm here with Jay Woods, Freedom Capital Markets Chief Global Strategist, and you're looking at some of the discount retailers to see how they're going to be doing this year as we see, hopefully, some of these prices go down. So let's talk about your good buy, the one you like, first of all, and that stock is Costco.
Costco, yes.
Yes, exactly. Here's the past year for the stock. It's done pretty well, and let's go through your case here. First of all, you're looking at the technicals, a risk-reward setup that you like right now. Let's call up the chart so we can talk through that.
Exactly. What we're looking at is a 5-year chart, and I always look at price action first and set it up from a risk-reward. If I'm going to invest my money in it, I want to know what's the worst-case scenario and hope for the best-case scenario. So what I see now is over the last 5 years, we've kind of stalled out, but we've had a nice little wedging pattern. And on the weekly pattern, we have broken out. And this is the strength I want to see. It is the leader within the sector. It remains the leader within the sector. And over a long-term basis, which I want to look at, I think this is the stock you want to be as far as the large retailers go.
All right, let's talk about some of the other points that you're looking at, why you're bullish here. Earnings growth. Slow and steady.
Slow and steady. They've consistently beat earnings 9 of the last 10 times, 7 of the last 10 times. They've traded higher, and it's not that volatile. So if you're a little risk averse, Costco is the perfect stock for you. It's just slow and steady rise. When they do well, they're rewarded for it. The investors are rewarded for it. And right now, the trajectory is higher, and I think the setup continues to be positive.
All right, let's talk about some of the other fundamentals that you're looking at here. And one of them has to do with the membership base of this company.
Well, they have loyal members. I mean, if you've been into a Costco, it passes the eye test one. But their membership renewals all during COVID, throughout some of the tougher times, the people remain loyal to the brand. In fact, your hairdresser was telling me he just became a Costco member himself. But the fundamentals are there. Their December month over month or year over year earnings, the sales went higher. E-commerce rising to its highest levels. So they're hitting it on all fronts. And to me, when you hit technical and fundamental, it's a good stock to be in.
Okay, we like always to ask people what could go wrong. And so when we look at Costco, maybe valuation.
The valuation is high. Historically, we're at a 44 PE. Over a 5-10 year average, it's in the mid-30s. So it may have gotten a little too far over its skis. We'll see. Maybe those earnings rise and it helps the PE come down a little bit. Yeah. But if you've been following this and you trade the stock, you may say, okay, it's gone a little too far too fast. I'll wait for a pullback to get in and I'll take some profits now. But overall, I think it's slow, steady. This is the one thing that has my antenna up. Okay, the PE is a little high, but that's the last thing I look at when I'm looking at
And do you have any position in the stock?
I do not.
Okay. All right, so let's talk about the stock that you do not like and think investors should avoid within this discount retailer space, and that is Dollar Tree. This chart looks quite different over the past year, and so as with the other technicals is where we start. And we have another chart that is like the last one.
Yeah, it is up 36% from its October low. It did, rally very nicely like much of the market did towards year end. But let's back it out. 5-year weekly trend. It had a nice run during COVID. And then what's it done? It's made consistently, this is not the best drawing, I apologize, but it's made consistently lower highs. This is a downtrend. The 50-day moving average, it hasn't closed above it for more than 5 consecutive days. And now it looks like it's failing it yet again. So from a technical price action first point of view, I'd need to see a little bit more before I wanted to get into the stock, and then we can look under the hood a little bit.
Let's look under the hood a little bit. Let's talk about inflation and how it sort of relates to Dollar Tree.
Well, Dollar Tree is one of those stories that does well when the economy isn't. People look for deals, they look to cut back, and Dollar Tree benefits from that. And what has happened now that we've peaked, CPI peaked 18 months ago, 9.1% today, a little bit of a bump in the CPI, but I don't think it has people panic. The market's flat. Inflation was a tailwind. Now, disinflation would be a potential headwind. So that is a problem that they may have because people feeling a little more confident, they'll go to other stores where they don't have to cut back as much.
Right. So we'll see what happens this year with all of that. And then finally, Family Dollar, which
Yeah,
they bought some years ago now.
Yeah, Family Dollar continues to be a drag. They've had issues within the stores. They've expanded extremely quickly. And then when you have margins that are decreasing because they had to raise some prices in the Family Dollar store, and they want to keep their prices low. So their margins have been shrinking. Shrink has been a factor that has been consistent. And then you look at 20 states just raised their minimum wage. That will cost them to raise price. The employees will benefit as a result of it, but it could hurt margins as well.
So as we did with Costco, we're going to look at what could go against your case. And in this case, we're doing something a little different today. We spoke to Michael Lasser of UBS, who likes Dollar Tree, and he told us why. Let's listen.
So the issue that Dollar Tree contended with most recently was, number one, the mix to consumable items away from discretionary goods, and that creates a margin drag. And the other issue is shrink, the unexplained loss of inventory. We think both of those issues will improve in 2024.
And that is basically what you said as well. What could go wrong for your bear case? They could improve some of these issues.
Exactly. He nailed it. I mean, and he's doing a lot more on-the-ground research than I am, but what they need to do is they're expanding too much. They need to kind of streamline what they have, what's working for them, and the shrink factor, it is a big deal. Shrink being theft in the stores. So they're going to have to put more resources to work to do that. Once they stem that tide, then, over the long term, the company's been great. The company is multi-billion-dollar company for a reason. But right now, if you're looking for a good buy and a good buy, I think Costco is the one you want to be in, and Dollar Tree is one that you want to avoid for now.
I like the hand gestures to illustrate that. All right, so let's recap what you're telling investors here, Jay. Buy Costco based on its steady growth that we have been seeing and strong fundamentals. The other side, you say avoid Dollar Tree. Inflation could be a potential headwind after being a tailwind. Thanks so much, Jay, for being here once again. And thank you for watching Goodbye or Goodbye. You can join us all week long at 3:30 p.m. Eastern.